Hi everyone, welcome back. So today again bearish day and lot of beating in mid cap and small cap. Uh, so that is bound to continue as the sentiments being turned negative by one of the largest fund house CIO. With that being said, let's just quickly see what's going on in like overall global market in a bigger scheme of things. So what you see right now on the right is these are all the global indices, and you will see this is an RRG chart. RRG chart has four quadrants: improving, leading, weakening, and lagging. If you talk about Nifty, it is currently in lagging section, and this is a weekly time frame. If I just switch it to daily time frame, you would notice, let me make it big. You would notice that Nifty was recovering. It was trying to go up. It was in the improving section, uh, and then it started to take a hit, but it's still not out of the woods. If we really see what's working and what not working, let's just go back to weekly time frame again. So where the money is flowing, if you see IT 40 DAX, this is German index. IRUS, this is the um, Russian index. So I'll just show you. And CAC 40. This is also moving towards leading section. So you can see while our Nifty is not performing, this is the weekly chart of CAC 40. Let me show you the German index chart. If you see here, it is at all-time highs, whereas we are struggling. Let me show you the Russian index. You can see after this downward correction, some sort of a wedge pattern which broke out a couple of weeks back. I think I shared this in one of the video or on a screenshot on Twitter. I don't remember exactly, but I did share on the day breakout. So it's moving there. So why are we discussing global indices here? Is just that we need to understand that is it as you know, right? FIIs are pulling out money from India. Currency is depreciating. Um, in the scheme of bigger things, where is the money moving? Is it coming, looking like coming back to India? And Indian index Nifty, which is comprising of like mega caps, large caps mainly. Where is the index placed? Is any money flow coming here? So right now doesn't looks like so. But yeah, it may be possible that in a couple of 1 or 2 weeks we may go into improving section on weekly as well, and then things can get better. Again, this is just hypothetical. It can this moves clockwise, meaning things from lagging things improve, they go to leading, and then they go to weakening, and then come back again. Sometimes from lagging they do not move to improving. If they continue to struggle, they keep on rotating like clockwise within a certain box or in two boxes as well, meaning lagging, improving, and then again going to lagging. So that can happen as well. If you go back to let me just say Nifty here, and you will see in daily, this is the Hang Seng. Let me just make Nifty chart here as well. So yeah, now it's updated on Nifty time frame because Nifty candle has closed, and you will see this tail of past couple of weeks was moving towards from improving towards leading, and now it has taken a downward, meaning the head is pointing downwards back to lagging. All right, so the money flow or the recovery, meaning from the lows of 2020, 22,786 to this high. So this was that move, and now it's going down. It's been 2 days, so it's factoring that, and the momentum is going down. If you see on the x-axis, this is the momentum, and on this y-axis, this is the relative strength. Now, relative strength against SPX is what we're talking about, meaning the mother market, US market. All right, that's a quick for 5 minutes on this. Now, in within the sector, we talked about yesterday. Bank Nifty and private banks are poised to do better, and I'll show you over here. Just focus on the top right. Let make it big. So you would notice here, Bank Nifty and CNX Finance, they are on a daily time frame in leading, and even today, let me go back here to the intraday movements. So this is intraday from starting 9:15, how the indices or sectors moved. You would notice the table here, which says Bank Nifty is down 0.9%. Actually, it's down more, but this do not includes the gap down. This is purely intraday movement, and from a CP, which is comparative performance, it is actually better than 0.3 positive 0.3% versus Nifty, because Nifty has fallen more, but Bank Nifty has also fallen, but comparatively fallen less, so it's still better. The worst sector of today was metals, and as you can see, comparatively, it has done minus 1.1 something percent, even worse than Nifty. And then again, apart from metals, small cap, mid caps, the talk of the town, the sensation created by um, one of the top mutual fund CIO, and creating panic in the market. Now, I don't understand the timing of this. There was valuation stretch long back, and it could be very much a trigger for people to panic, and then some big funds get into it. But if you are doing a long term SIP, meaning more than 10 15 years is your investment horizon, then you should not stop. But yeah, if you are looking or planning for asset allocation, and you understand market cycles and timings, and how when to move into what category, then you should definitely be looking to hybrid funds and some of these large caps, mega caps, blue chip funds, etc. Or multi asset allocation, adding gold, debt, and equity in 40 30 30 sort of a ratio. So there are plenty of funds available. You can go and have a look. But again, if you see Bank Nifty, it also fell, but it's at the top. CNX Finance and Bank Nifty. We can also check the intraday chart. Let me just go to Bank Nifty. Make it 5 minutes. Let me just make it big. Let me hide this indicator. So you will notice this is the intraday movement. a little bit of gap down, and then if you see this, for this below indicator is for like option buying, and where it is red and solid, you will buy. So this is the place where the buyers get momentum, and this is the place where you get cautious, meaning get ready for a trigger to buy again. So as soon as it gets solid, and even if you see in this RSI wave, it started to move down again, you would buy, and you would buy, and you will probably get out somewhere here you start buy. So you can capture around 100 200 points. And this is like data and indicator. You can do price action, and you can also look at options data. Speaking of options data, if we look at it, give me 1 second. I was making some correction. Let me go here. So you'll see starting 9:19 in the morning, we got an option PE buy, put buy signal, and a call sell signal. So this updates like every 2 3 minutes and live, and you'll see the bearish uh, trend, intraday trend continued, and that put that you bought, if you would have bought theoretically at 6:15, it went up to what, the max is like I see 4,400, which is 913. Now one cannot just enter at the bottom and exit at the top. So even if you assume half of it, so it will be like 2200 per lot, if you just couldn't couldn't trail to the exact. And if you would have sold call option, then you would have sit, right. So it have been, because the market was down, you will not really square off your call sell. So it would somewhere ended around 3500 odd MTM in call sell. So there was massive unwinding in the 50,000 put. The green bars are put, so you'll see they are in negative. So puts mean unwinding. 50,000 calls were written, and 49,500. You see a big red tower intraday. Heavy call writing here as well. And if we look at FIDI data, yeah, it's out. You'll again see 11th February. This is the max figure of the month so far. FIIs have sold 44,086 crore rupees of in cash, and DIs tried to match it, but probably retail joined hands with FIIs. The long short in future index remains same 0.17. Little bit of more shorts added, from 210 it became 220 221, but overall net same. From retail side, they were heavily long, some longs were cut. So yeah, I mean, retail is feeling the pressure on their longs, and FIIs are still not giving up their on their shorts. So that's what going on right now. If we closely have a look at small caps, let's say first say mid caps. uh, Let me CNX mid cap 100 index. So we see this sort of a -3% sort of a structure here. And let me show you one thing here. And let's hide all of these intraday indicators and see from a positional standpoint. Let's just draw a support line real quick, right? This is what was the support from a longer 2024, starting 2024 perspective. It has been taking support on this and this. Now finally it's trying to break it. With that being said, if you see this indicator below Red Bull, which is nothing but is telling you what would you get in a CAGR perspective. So as you know, market mid caps go up, the valuations becomes higher, they become pricier. On a longer term horizon, the if you do the maths, the CAGR will also looks better. But if this black line is the mean, and if they sustain below the black line, meaning the CAGR trend is better off than its median. Okay, all right. So it's better than the mean, not median. So and this has not just happened for the very first time. It has, if you see here, it went down below, went up. So these green clouds are bullish areas, and red ones, if you see here, starting from this date, it's majority of the time it's been in red. There was one pullback, but that was also sold into, and it's going in red. So if you look at this, why I'm telling you this is, so these corrections people are getting scared of, and that is the narrative there in the YouTube community as well. And if you look at from 1 year's perspective, like right now we are like at 50,887, and we were there on 6th of May, like about a year back. So if valuations are stretched right now, were they not stretched a year ago, or after here, or somewhere here, right? So what's the point of fear mongering right now? I mean, if I am doing SIP, and I don't need that money for next 15 years, I have a financial goal, then why would you stop it? I'm totally against stopping your SIPs. SIPs is the only way you invest for yourself, for your family. And if you stop that, I mean, there's abundance of opportunity, and you would just have limited funds. And if you still can't collect and make wealth in long term, then what's the point, right? So it's looking weak, but I think there will come a point where it will find some support. If you see it in past as well, it has gone down. It's down below its mean level, and then has given good buying opportunities. Here also it went below, and then find good. There has been a bigger move from COVID. If you see, it has been majority in green from this area to 2020 September to somewhere in 21 October, and then it was in red. So it has always gone into these sort of corrections, and these corrections do scare off people. And that is the nature of the market, and that is the volatility of small and mid cap. So my take is, if you're doing SIP, you should not stop it. When you started, you came with a goal in mind. Of course, you can pause it and do your SIPs to a better asset, which has lesser volatility and potentially can give you better returns based off the market structure right now. But exactly pulling out your money right now may not be the best thing, unless you're very sure that this is the bottom point of the market. And trust me, nobody knows the bottom. All right. I think that's all I had. I don't have anything else. So today just went a little longer explaining a couple of things. So yeah, let me know in comments if you like these sort of videos. I can record on a little more regular basis. And if you need to cover something else, you feel free to share your suggestions. I'll be happy to look into it. All right. Thank you. Bye bye.